Welcome guys to the ultimate TradingView tutorial for 2025 and beyond. My goal with this video, and the reason it's so long, is because I want to make this the best TradingView tutorial on YouTube. When you first start off using TradingView, it can feel really overwhelming. Things such as, how do I find the right charts? What are the best indicators and tools, and how do they even work? How do I set price alerts? What is the replay mode? And can I actually buy and sell inside TradingView? Because I still remember how I felt when I started with TradingView for well over 5 years now. I hope I can guide you through everything you need to know in a step-by-step manner and from a beginner's perspective. So yeah guys, get comfortable, perhaps grab a coffee and a notebook, and without further ado, let's get started right away here. Alright, so hello guys and welcome to this ultimate TradingView tutorial for 2025. I'm recording this video just before New Year's Eve 2024, and let's just get started right away here. The very first thing you want to do is that you want to head over to tradingview.com. Then simply press enter and you should arrive to this page right here. As you can see right now, there is a sort of Christmas theme and you can see your recap for 2024. But when you watch this video, you might see another image right here, because this is just a temporary event going on right now. But now, before we can start going over all the tools, indicators and systems TradingView has to offer, the very first thing we need to do is that we need to sign up. Because if we don't sign up, you will always get this annoying pop-up window. And when this window appears, all your work will be deleted. So before we do anything, we have to sign up. And for the sign up process, I have actually managed to get a special link that will be both here in the top of the description, and you will also find it in the top comment. And you can use this link to sign up completely for free. TradingView has a great free version, and we will talk more about that very soon. But the benefit by using this link, as you can see, is that if you use this link, you can receive $15 as soon as you buy your first subscription. So if you somewhere down the road decide that, now I feel ready to upgrade to a paid plan, you will get a $15 reward for doing so. And at the same time, you will also support the channel because I will get a small commission if you eventually decide to upgrade. So guys, don't forget to use that link before you sign up. Next, you simply want to go down here where it says join to unlock $15 reward. And here the sign up process is very straightforward. As you can see right here, you can sign up with Google, or you can use, Facebook, X, or any of the other alternatives like your email. It's a very straightforward process, and because I already have an account, I cannot show this once again, but it should only take like a minute or so. But now, if you for some reason don't want to use the link, you can simply go up here to where it says get started. You press on get started here, and then you can go here where it says sign up. And as you can see, it's free forever. So you just press sign up right here. But now, once you have made your account and logged in, you should see a little button up here in the upper right corner. And now I actually want to take some very short time to take a look at the different plans TradingView has to offer. So now let's quickly head up to the button right here where it says upgrade. So we want to press on this button right here, and it will take us to the TradingView pricing page. And on this page, if we scroll down a bit here, you can see that we can look at the different TradingView plans. If we scroll down even more here, and you go down and click on show all features, you can see that we have a detailed comparison between the plans. So for example, right now, the free version is called Basic. And we also have a plan called Essential. We have a plan called Plus. We have a Premium plan. The Premium plan is the plan I'm using right now. But I have been using TradingView for a long while. And I actually don't recommend that you go for Premium right away. I recommend that you start with the completely free TradingView plan, or that you go for the essential plan, because in the beginning you will have so many things to explore already on the essential plan. And the other thing I actually recommend that you can do is that if you scroll up here to where it says Essential, Plus and Premium, you should be able to see that you can choose a free trial. You can see right now it says, for me, it says buy now, and buy now. And that's because I logged in to another one of my accounts that are on the basic plan. And the reason I'm doing this is because I want to show you guys how TradingView looks like from a beginner's point of view. But if you are new to TradingView, you should be able to see that you can choose a free trial for all of these plans for 30 days. So my recommendation is that you either start with the free one or the essential one, or the third option is that you go for either one of the free trials. And if you're gonna do the free trial, you can simply choose the best plan, the premium plan right here, and try premium for free for 30 days. That is yet another option. But now you might wonder, you know, what are the benefits of premium? Well, there are many benefits. First of all, you can see that all the paid plans for TradingView, you will have no ads. So that is, you know, one annoying thing about the free version, unfortunately, that you will get some pop-up ads. But some other, you know, big benefits is that you will be able to have more indicators per chart. The essential one has 5 indicators per chart. With premium, you can have up to 25. That's more than enough. You will be able to have more charts per tab. And there are also a few great indicators that are only available for the premium plan. So for example, volume footprint, the auto chart patterns is an amazing indicator that is only available for the premium. So of course, you will get lots of benefits from TradingView Premium, but I still highly recommend that you start with free or essential plan. But yeah guys, in this video I don't really have time for a detailed comparison, and you guys are probably not really interested in that right now. You guys want to know how to use TradingView step by step. So let's continue with the tutorial. To do this, we'll go up here to the upper left corner and we press on TradingView. By doing this, we will go back to the home screen. So now then, let's quickly take a look at the home screen for TradingView. And as I already mentioned, right now we have this New Year's event. So when you watch this video, you might see another picture, but don't worry about that. What probably will be the same is that up here in the, you know, middle up, we have a few tabs. And don't worry, in this video, we'll take a look at step by step all the important features you need to know. We have a products tab, we have a community tab, market, news, brokers, and more. And what you also can see is that we have a search bar up here where you can search for markets. But now then, the very first thing you need to learn about TradingView is how to open up a chart. And to open a chart, what you want to do is that you want to navigate up here to the products tab, and then you want to press on super charts right here. And just like that, we have opened our first chart. To see what chart we are looking at, you simply look up here to the upper left corner, and you can see that it says Apple right here. So right now we're looking at an Apple chart, and you can also see that it says 1D here. 1D means that we're looking at a daily chart, or in other words, every single candlestick or every single bar on the chart represents 1 day. And don't worry, we will talk more about that very soon. But for now, just know that we're looking at Apple on a daily chart. But now, how do we open up a new chart? Let's say we want to open up maybe Tesla or Nvidia. Well, to do that, we navigate up here to the upper left corner where it says symbol search. You press this button right here, and then we can search for whatever we want. As you can see, we have stocks, funds, futures, Forex, crypto, and so on and so on. But let's begin simple here, and let's press on the stocks button right here. So now we will only find stocks. And what you want to do when you search here is that you want to search for something called a ticker symbol. So for example, The ticker symbol for Tesla is TSLA. So when you search for TSLA, you will be able to find Tesla right away. So we search for TSLA and we have Tesla right there. So to open up Tesla, we simply press on Tesla right here. And now, remember, we can look up here in the left corner. You can see that we're looking at Tesla on a daily chart. But let's go up here once again to the symbol search, because now you might wonder, what is a ticker symbol and why do we search for a ticker symbol? Well, a ticker symbol is a short combination, usually like 2 to maybe 4 letters, that we search for in order to find what we're looking at more quickly. So for example, now let's say that we want to open up maybe, Amazon. What we of course can do is that we can search for Amazon like this, and most of the time you will be able to find the right stock because TradingView has a good search function. But if you are searching for something smaller, maybe a stock in your own country and so on, it can be hard to find if you don't search for the ticker symbol. And to find the ticker symbol of a stock, you simply Google, for example, Amazon ticker symbol, and it should appear. So for example, the ticker symbol for Amazon is AMZN. So if you search for this, you will be able to find it. And if we wanna, let's say we wanna open up maybe a cryptocurrency, so we can go to the crypto button right here, or you can simply press all. When you have all selected here, you can search for anything, whether it's crypto, Forex, or stocks. And if we want to search for Bitcoin, the ticker symbol for Bitcoin is BTC. So you simply search for BTC, and as you can see, Bitcoin will appear. But now you guys might be confused, because as you can see, we have many different kinds of Bitcoin, right? We have, it says Bitcoin US dollar, blah, 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 blah. And you might wonder, what are all these different Bitcoins? Well, the thing about Bitcoin here is that Bitcoin is traded on different exchanges. So if you look a bit here to the right, you can for example see that right here we have Bitcoin on Coinbase. So Coinbase is a Bitcoin exchange. So Bitcoin is traded on Coinbase, but it's also traded on another exchange called Bitstamp. It's also traded on another exchange called Binance. So Bitcoin is actually traded in sort of different marketplaces. You can think about it as different places where buyers and sellers meet. However, you will notice that it doesn't matter too much which of these markets you choose, because the price will be about the same. But what it can matter is how much is traded on that exchange. So in general, I recommend to choose an exchange that is well known and that has lots of volume, that has many traders on it. So for example, Binance is the largest crypto exchange right now. So if you want to open up Bitcoin, I would recommend to go down here and choose Binance and click right there. So now, as you guys can see up here in the upper left corner, you can see that we are looking at Bitcoin here measured in US dollar, and we are on a daily time frame, and the exchange is Binance. So you have all the information up there in the left corner. But alright, so the next thing we need to understand in order to use TradingView effectively, and even use TradingView at all, is how do we read price? And to be more specific, how do we read these candlesticks that you can see on the chart? Using candlesticks is by far the most common chart type, and this is a skill every trader needs to know. So let's take a quick moment and take a look at how do we read and understand these candlesticks. All right, so as you can see, I just recently put an image here in TradingView. By the way, that is a cool thing you can do. You can simply drop images right onto the chart. That's pretty cool. But as you can see, right here we have two different candlesticks. We have a green one and we have a red one. And let's quickly take a look at how to understand these candles. Well, what a green candle basically means is that the price went up during this candle. And what a red candle means is that the price went down during this candle. You can see at the bottom of the green candle, you can see it says open. This right here is when the candle started. And remember, right now we are on a daily time frame. So right now, every candlestick represents 1 day. But this doesn't have to be the case. We can, for example, have 15-minute candles. So if we have 15-minute candles, it means that every candlestick represents 15 minutes. And we could also maybe have 5-minute candles. We as traders can choose how long each candle will be. But for now, to make it simple, let's just think about the candles as daily candles. So every candlestick here represents 1 day. So for the green candle, the day started right here. So the price was right there when the day started, and when the day ended, it was up here at the close. So you can see that during the day, the price went from this point to this point. However, you can also see that we have a high and a low. This is the highest and lowest point that the price reached during the day. So let's just imagine how this price could have looked like. So the price started right here. The day started right here. But during the day, the price went down all the way down to this point, right? It went all the way down here and reached a lowest point. And during the day, the price also went up all the way up to this point. But before the day was over, the price went down and closed the day at this point. So this right here is how the price during the green candle could have looked like. And the opposite is of course true for the red candle. This candle opened, or in other words, the day started right there. It reached a highest point during the day up here. It reached a lowest point during the day down here. But before the day was over, the price had reached this point. But all right, so now let's zoom in a bit here and see if we can read a real chart here. So let's, for example, take a look at, let's maybe take a look at this red candle right here. I just chose a random candle. So remember, for the red candle, the price started right here. So this right here was the open, or in other words, the day started at that price level. So if we want to, we can actually go to the right here and read the price level. The price was around 100,000 US dollar. Bitcoin is pretty much at 100,000 US dollar right now. But you can see that before the day was over, the price actually closed. So the close was at this level. So we can go to the right here and read that the close was at around 98,000. But during the day, we actually reached a high. So the highest point for Bitcoin during this day was, pretty much at 103,000. And the low, or in other words, the lowest point during that day was all the way down at maybe, 96,000. So this is basically how you read charts. It might feel a little bit complicated in the beginning, but you should get used to it very quickly. But all right, guys, so good job. Now, at this point in the course, you already know how to read a candlestick chart, and that is a great start. But what I can also show you guys real quickly here is the other types of chart you might want to use as a trader. So if you go up here to the bottom right here, you can see that it looks like a candle. If we actually press on this button, so we go up here and press here, you can actually see that we have multiple different chart types. And I'm not going to go into detail about the chart types here, but I'm just going to show you a few different ones. So the first one, and this is like the most classic one, is the line chart. So let's press on the line right here. So you can see now we only have a simple line, and this is something some traders use. Many investors, for example, that are very long term might just be fine with using a line chart. But the downside with a chart type like this is that we don't get as much information. Remember, for a line we only have 1 point for every day, so we only have one sort of data point. But if we go here and choose a candle instead, you can see that we actually have, for every single day, we now have 1, 2, 3, 4 data points. So we get more information from candles. And that is, in general, a good thing. The more information, the more sort of potential we as traders have to read and understand the market. But if we once again go up here to the bottom where we can change chart type, we actually have a few other types of charts that are exactly as good as candles, but not as popular. One is the bar chart. So click on the bar chart right here. Now you can see that instead of candles, we have some, a little bit more complicated looking bars. But these bars tell us the exact same information as candles. So we have, for example, the open and close, we have the low and high, but for many beginners, these candles or these bars are harder to read. So for most traders, my recommendation is to not use this chart type. But if you want to, definitely feel free to use the bar chart because you get as much information. Next, let's go up here to the bottom once again. I can also actually go down here and show you one more thing. Or before we continue here, I want to show you the volume footprint, or I want to talk about the volume footprint. This right here is a much more advanced tool, and this is one of these tools that are only available for TradingView Premium. So if you want to try out these more advanced tools, you can definitely go for the 30-day free premium trial. But for now, I'm not even gonna show you the volume footprint. I will make sure to make a video about that on the channel later on. But this is one of these advanced features that can be very valuable. So I just wanted to mention that the free version for TradingView is a good version, but it doesn't have everything. I can also go down here and just quickly show you guys the Heikin Ashi chart right here. As you can see, this will make the candlesticks much more smooth, and you can see that we will have runs here with many green candles in a row, and we will have runs here with many red candles in a row. This is a relatively common chart type. And in simple terms, this chart type works by basically making the price smoother, and it sort of filters out noise, which can make trends easier to spot. But at the same time, when we make trends and the chart smoother, we will also lose some information. So you will get some benefits from Heikin Ashi charts, but you will also lose some information as well. So it is a trade-off you need to consider. But for the rest of the course, let's go back here. I will be using candles. As I already mentioned, candles are by far the most common chart type, and in my opinion, this is the best chart type. So throughout the rest of the course, I will be using candlesticks. But alright then, so now when you know about different chart types and you know how to read candlestick charts, now it's time to start learning about how to sort of navigate and how to use TradingView effectively. So the first thing I want to talk about is how to zoom in, zoom out, and sort of move around the chart effectively. So the very first thing you need to know is that to zoom, you simply use the mouse scroll wheel. So this is how you zoom in, like this, and zoom out. So this is like a horizontal zoom in and zoom out. And to zoom in the other direction, or in other words, zoom in vertically like this or up like this, you simply hold your left click on the sidebar right here and you drag up or down. So this is how you zoom in. So let's say I want to zoom in at this point. I zoom in with the scroll wheel and I zoom in on the vertical axis as well. And what I also do to, move around the chart is that I click and hold with my left click on the chart. This way, as I do right now, you can see that I can drag the chart around. So I scroll with my mouse wheel, I drag around the chart, I use the sidebar, and this is how I can move around the chart in an effective manner and very quickly. If you for some reason can't do this right now, you might have the auto function set. So to see if you have the auto function, you go here to the, wait, I actually need to, wait a minute, I need to move my cam here for a while. So I'm gonna be away for a while. But if you go here to the right bottom corner, you can see that it says auto right here. And I have this one unchecked, but if you for some reason have this one checked, let's check this one, you can see that now when we move the chart, it will zoom in and zoom out automatically. You can still use the mouse scroll wheel, but you will have some auto zoom on. And if you like this, feel free to keep the auto zoom, but for me, I don't like the auto zoom, so I'm gonna uncheck this one. I prefer to have the freedom to move around the chart exactly how I want. Another thing I can just mention while we are at it is that if we go down here once again to where we have the auto thing, you can see that we also have something called logarithmic. And if you press this button like this, the chart will be logarithmic instead of being regular. So by pressing logarithmic and then pressing back, you can see how the chart changes. And the difference here, I want you guys to look at this move right here. You can see that when we have the logarithmic scale, you can see that this move is very large. But what happened when we take away the logarithmic scale? Look at that exact point. Look at the same point. You can see that when we take away the logarithmic scale, you can see that this move will only be a tiny portion of the chart. And the reason for this, let's go back to the logarithmic mode. Oh, now you can see the chart is way zoomed out. But the deal here with logarithmic mode is that when this mode is on, a move from 10 to 20, so this right here is a 100% increase, right, will be the exact same as a move from, say, 100 to 200. Both of these will be the same distance on the logarithmic mode. And this makes it so that when we zoom out a lot, well, this market actually only has data to around 2020. So let's actually open up another Bitcoin chart with maybe more data. Let's look at Coinbase right here. So now we are looking at Bitcoin on another exchange on Coinbase. But you can see here when we look at the logarithmic mode on Coinbase, you can see that we can see the price movements pretty well from all the way back here in 2016. But if we don't use the logarithmic mode, you can see here, it's even hard to see, but you can see that the price movements here from 2016, we can't even see. So we need to have the logarithmic mode here in order to even be able to see these price movements. But for most traders, we are mostly interested in looking at the most recent price. And when we look at the most recent price, we don't want to use the logarithmic mode. So for pretty much all traders, we want to use the normal mode and have the logarithmic scale unchecked. Alright, so now when you know how to use and move around TradingView in an effective manner, now you might wonder, how do I change TradingView to look better and look more pleasant? And this will of course vary by person to person. But the first thing I want to show you guys, and I know that this is a question that many people ask, is how do I use TradingView in dark mode? And to do this is very straightforward. You simply want to go up here to the upper left corner, you press on the button right here, you go down and you simply check dark theme right here, and then you press yes. And as you can see, just like that, TradingView becomes dark mode. And if you want to customize the chart even further, what you want to do here is that you want to right click on the chart. Then you go down here and press settings, and here you can see that we have something called symbol. So here you can change the color of the chart. Instead of having green and red, some traders like to have the green candles white and the red candles black, and so on and so on. So you can customize this to however you want. You can also change the canvas, or in other words, you can change the background. Maybe you want to have no lines on the chart. You can see right now we have lines both horizontal and vertical. You can take away the lines by clicking none. You might want to have, you know, a different, color in the back. I don't know. Now it looks super, super ugly. So if you have made a lot of changes and want to change back to the default settings, you go down here to where it says template and you basically click apply defaults. And just like that, the settings will reverse to the original settings. Then you can go down and press OK. And now if you want to change back to light mode, you can go up here to the upper left corner right here. And you can simply, uncheck the dark theme, and just like that, TradingView will be white once again. And I think for this video I will keep TradingView white because this is the sort of standard settings, and I want to make this video as sort of beginner friendly as possible. Alright guys, so now it's time to take a look at the most important TradingView tools you need to know about. And to switch it up a bit for this section of the video, let's actually switch the chart type. So remember how to do this. We go up here to the upper left corner, we click on symbol search, and let's say that we want to search for, I don't know, let's say we want to open up a Tesla stock. Remember, what you do is that you search for the ticker symbol, and the ticker symbol for Tesla is TSLA. So we want to open up the one here at the top called Tesla, and as you can see, it's traded on the Nasdaq stock market exchange. So let's open this one up. All right, so now as you can see, we are looking at Tesla here, and we are still on the daily time frame. But one thing that is important to note here is that the tools I'm going to show you guys can be used on the daily time frame, but they can also be used on pretty much all time frames. But all right, so the very first tool I want to show you guys is this tool right here. If you press on the trend line tools and then simply go to the trend line and you select the trend line. This right here is one of the most important tools, and you will use this one a lot. To use this tool, what you do is that you simply press on one point on the chart, and then you drag your mouse and you press on another point. So by doing this, we can draw a line that slopes upwards. To draw a new line, you have to once again select the line, and you can do that by simply clicking right here. So now we have another trend line selected, and if we want to, perhaps we want to draw some sort of trend channel, then we can draw another line like this. And now you might wonder, what are these trend line tools used for? Well, first of all, as I already pretty much showed you, we can use this tool to draw trends. So if you look at this Tesla chart right here, you can see that by looking at this price, you can see that it looks like the price is in an uptrend. In order to have an uptrend, we need to print consecutive higher lows, right? But we also need to print higher highs. And here is where we can actually use our trend line tool. So what I do here, I go up, I select the trend line right here. And in order to draw an uptrend, what we want to do is that we want to connect the lows of a trend. So we draw the trend line like this, we adjust it a bit here. We want to have as many touches as possible. So right here, we have a trend line defining an uptrend. But now, if you guys want to draw a trend channel, this is basically when we have two lines. We have one line at the top and one line at the bottom. I actually have a trick for this. In order to have an exact parallel line, what you want to do is that you want to press on your current line, then you press Ctrl plus C, and then you press Ctrl plus V. By doing that, as you can see, we will have the exact same line. This is a line that we just copy and paste, and we can simply draw this line like this. And as you can see, just like that, we have a beautiful uptrend. But as you can see, Tesla is right now testing the low or the bottom line of this trend. So if we get a strong break below this upward sloping line, that could actually be a first signal that the trend might reverse to actually a downtrend, or that the trend might reverse to a sideways market. That's one thing that is important to notice, that just because a trend stops doesn't mean that it will reverse in the opposite direction. It can simply go from, for example, an uptrend to a sideways trend. But now, yet another use case of the trendline tool is to draw patterns. And more specifically, we usually draw something called chart patterns. So let's say that we have a price movement that looks something like this. We have the price, it goes up, then it starts to move sideways here, but during the sideways market you can see that the price prints higher lows, right? So this right here is actually an example of a chart pattern called an ascending triangle. And this is another case where we can use the trend line. So we can use the trend line here to actually draw out the triangle. You will see, so we draw one trend line like this, then we select it again and draw one trend line like this. And as you can see, here we have drawn a triangle looking structure. So the two main use cases, I would say, of trend lines is to draw chart patterns and to draw trends. But we do have some more use cases as well, but these are pretty much the only ones you have to know for now. Alright, so that's great. Now you know about the trendline tool. Another tool you need to know about is the tool a little bit down here called horizontal line. And this right here is a tool you can use to draw key support and resistance levels on the chart. So if you look here at Tesla, you can, for example, see that right here, this was quite a while ago, but you can see that we saw a clear, the price got rejected at that level, and it looks like we got a reaction once again right here and once again right here. So here we might have some sort of resistance, right? And this is where the horizontal line comes in. So to repeat, to choose the horizontal line, you first go and click horizontal line right here, and then to select the line, you want to make sure to just press right here. So this one is blue. Now, to draw the horizontal line, you simply click on the chart like this. And as you can see, just like that, we draw a very nice resistance level. And if you look closely, what happened when we broke the resistance? Well, when the price pushed above the resistance, this was actually the beginning of a massive move towards the upside, right? So that was indeed a very important resistance. However, what I like to do for both support and resistance levels is to actually use another tool. So this horizontal line tool is something you need to know about and should learn. But what I use for support and resistance is actually another tool. To open this tool, what you want to do is that you go down here to where it says geometric shapes. You press right there and you go down to the rectangle tool. So this tool is pretty much like a horizontal line, but here by using this tool, as you can see, we can draw a sort of area instead of a perfect line. I also actually want to customize this one a bit. Let's make the border black here, and we can use the background. I prefer something like maybe a little bit gray, something like this, right? So we can draw it like this. So now you might wonder, why do I use the rectangle tool? Well, the reason for this is that support and resistance levels will never pretty much be perfect lines. In real life and in real markets, these support and resistance will often more be sort of zones. As you, for example, can see in this example, the first resistance was right here. The second resistance was a little bit lower. The third resistance was a little bit higher. So it's very rare that you will have these perfect touches where every single time the price reverses at the same level. It's better to adopt the mindset that support and resistance are more similar to zones compared to lines. So that is why I think the rectangle tool is very useful. And this tool actually have other use cases as well, so stay tuned for that. And now for the next tool, I actually once again want to switch back to the Bitcoin chart because this is one of my favorite examples of this specific tool. So let's go back here to Bitcoin and let's search for BTC and go to Bitcoin on Coinbase. And make sure that you are on the daily time frame, and I want to go back here to the last bull run because this example is so perfect right here. The next tool I want to show you guys is called the Fibonacci retracement. And to open up the Fibonacci, what you simply do is that you click here where it says Gann and Fibonacci tools, and you press on this arrow. Then you want to simply go down here and click on Fib retracement. And to understand this tool, let's actually first go to just a blank chart so I can show you guys. To draw this tool, what you do, you make sure that you select this one so it appears blue. Then you press on one spot on the chart, then you drag the tool down and you press on another spot on the chart. And as you can see, just like that, you will have multiple lines, or in other words, multiple Fibonacci levels will appear, and you will also have these numbers just next to the lines. And now, to understand the Fibonacci, you need to first of all know what does these numbers even mean. Well, first of all, you can see that it says 1 right here, and this simply means 100%. The next number right here, 0.786, simply means 78.6%. This next number right here, this is an especially important Fibonacci number, the 0.618. If you are new to trading, you might even have heard about this number, but this is a very common number. This one simply means 61.8%, and so on and so on. So these numbers are just percentages. And now you might wonder, why, how do we use these percentages? Well, now let's go back to the chart here and take a look at how we actually use the Fibonacci tool. So first of all, what we can see here, this was the Bitcoin bull run from, all the way back here in 2021. And you can see that we are in a clear uptrend because we're printing, higher lows, and we're also printing higher highs. And to use the Fibonacci, you want to anchor the Fibonacci at the low in an uptrend, and then you drag it up to the high. So you can see I anchor from the low circle right here, drag it up to the high circle. And now let me delete the drawing and zoom in a bit here. So what are the Fibonacci numbers actually tell us? Well, you can see it says 0 right here, and that means 0%. It says 0.236 here, that means 23.6%. And this means that the price have been pulling back, or it has dropped 23.6% of the initial move. I hope this makes sense. The initial move is 100%, and from this line right here, the price has dropped 23.6%. So if the price drops down to the yellow line, it has dropped 38.2%. Oops, sorry about that. And if the price drops all the way down to the 0.5 line, the price has dropped 50% of the initial move. And the good thing about the Fibonacci tool is that most pullbacks will actually end somewhere in this area. So somewhere in between the 0.382 and the 0.618. And as you can see in this example, the price went up, it came down here to the middle of this area, and then it exploded to the upside. So this was where the price reversed in this example. And the reason I really like this example, as you can see, is that this chart is perfect. We use the same method right here. From low to high, the price pulls down to the 0.5 area, then we see the next move. And we can actually repeat this process even further. So once again, we can drag from low to high. In this case, the price went a little bit more down. You can see it went down here, but it's still reversed in this area between the 0.382 to 0.618. All right, so the next important tool I want to show you guys real quick is a tool that can be found right here where it says forecasting and measurement tools. If you press on this button right here, you can see that we have a long position and we have a short position. The long position is a tool, let's choose this one, that you can choose and draw out on your chart by just clicking like this. And this is where you bet that the market will go up. So this is the classic thing when you, for example, buy a stock or buy a cryptocurrency, you want the market to go up. And this right here is a tool that you use when you have decided where to buy. So let's say that you use the Fibonacci tool and you also found another pattern right here. This right here is called a bullish engulfing pattern. So let's say that you buy right here. So you buy Bitcoin right here. What you then do is that you click forecasting and measurement tools, you use the long position, and you use this tool at the level you bought. So this is where you use this tool. And this tool is then used to measure your target level. This is where you sell and get your potential profit. And you also have the stop loss level. This is the level that if the price goes below that level, you will automatically sell. So let's say in this case that you place the stop loss just below the lows of the pullback. You can see we have a low right here, low right here. So we set the stop loss just below that zone, right? And then depending on your strategy, you can set different target levels. So let's say that you have a 3-to-1 risk to reward. This means that the green length here is 3 times larger than the length down to the red line. And this means that when you win 3 times more compared to when you lose. This is a common risk to reward. And to do this, you simply drag up your target until it says 3 right here on the risk to reward. And just like that, you have planned your long position trade. And the opposite is of course also true for the short position. Let me quickly go over that one. So this, you once again go to forecasting and measurement tools. You click short position right here. This is the tool you use when you bet that the market will go down. So you can see that this is the opposite. Now we have the green area pointing downwards here, and we have the stop loss. So let's say we want to do a 3-to-1 risk to reward. Now you can see 3-to-1 risk to reward, and you enter the price start right here. And your goal when you use this short position is that the price would go down to this point. Then you lock in your profit and make money. All right, guys. So now it's finally time to take a look at TradingView indicators. And I know that this is a part that many beginners tend to be excited about. You know, what is the best indicator, and you know, what indicators should I use? How does the indicator work? And so on and so on. And that's all good. And in the end of this course, I will actually include a bonus section where I personally rank TradingView indicators from the best, which is S tier, all the way down to worst. So make sure to check out that bonus section if you want to have a sort of fun ending to this course where I rank indicators. Have in mind that that will not be, you know, a perfect ranking. That's just my personal opinion, but I do think you will like that chapter. But now the first thing you guys of course need to learn about is how do we find indicators and how do we use indicators in TradingView. So let's take a look at that. First of all, to open up an indicator in TradingView, what you want to do here is that you want to go up here to where it says indicators and press on this button. And here, as you can see, we have the indicators tab, and we have a few tabs. It says personal right here. This is actually TradingView's custom scripting engine. And this is a little bit outside the scope of this video, but it's very cool that you can actually create your own scripts and own indicators. That's amazing. But here you have a tab called Technicals. This is the traditional technical analysis indicators, but you also have financials. For Bitcoin, we don't have any financials, but if you are trading stocks, you can find indicators there as well. And we also have community. This is massive because here you can find all the indicators that have been created by other TradingView users, and there are just tons of indicators to explore. This is one thing that makes TradingView so amazing, that you know the community is huge and we have tons of traders working on creating the best indicators. But as a beginner, I wouldn't worry about all these tabs, because the easiest way to use the indicators tab is to simply search for the indicator you want to open. And one of my favorite indicators is called the MACD. So you can see when I search for MACD, multiple indicators will appear. You can see some indicators appear here under technicals, and these are indicators created by TradingView. Then you will have lots of indicators where it says community right here. And these are basically the indicators created by the TradingView community. So as you can see, we have tons of different MACD indicators to explore here. But for me, I think that the standard MACD indicator called moving average convergence divergence is definitely good enough here. So let's open this one up. So as you can see, now we have opened up the MACD indicator, and the MACD indicator has appeared here on the bottom of the screen. And unfortunately, I don't really have time in this video to go over in depth how the MACD indicator works. But if you are interested in that, I actually have a full MACD course here on the channel. And I will make sure to link that course somewhere up in the corner. So make sure to check that one out if you want to learn about the MACD. But I can just really quickly say that the MACD is an indicator that measures momentum. So when we see strong price movements to the upside, like right here, we will see strong reactions here on the MACD. And let me drag the chart a bit to the left here so you can see. And when we see sort of strong movements to the downside, like we're seeing right here, we will have strong reactions on the MACD. And one of my favorite methods to use the MACD is something called MACD divergence. This is when the price goes in one direction while the MACD at the same time goes in the opposite direction. This right here is what we call a bearish divergence and indicates a reversal, a potential reversal to the downside. And as you can see, after this divergence appeared, you can clearly see we went in opposite direction. We indeed saw the price falling at least a bit here. The question is, will this continue to fall here for Bitcoin, or will this just be a tiny reversal before we continue here to the upside? And now guys, the next indicator that is very important is called the volume indicator. And I think this indicator might already be on your chart because the volume indicators are these bars. You can see these bars down here, just above the MACD. But in case the volume is not there, let me actually delete the volume and let me also delete the MACD so we have a clear chart. Let's just take a look at quickly how to find the volume indicator. To open up the volume indicator, we go up here to the indicators tab in TradingView, and what you simply want to search for is volume. And here you can see when it comes to volume, we have tons of different indicators, both created by TradingView, and as always, you will also find many community indicators. But now we want to keep it simple and just open up the standard volume, and this indicator is just called volume. So let's click right here. And just like that, as you can see, the volume bars have appeared here on the chart. And once again, I won't have time to go into detail about volume, but luckily I have a full course about volume here on the channel, and I will also of course make sure to link that video so you can watch it after you are done with this course. But in very simple terms, you can think about volume, or let's first explain how it works. You can see volume are measured by the bars right here. So when we have tall bars, like for example this bar right here, it means that we have lots of volume. So we have a lot of volume, and this means that we have seen many transactions. So during this specific day, remember we're looking at Bitcoin right now, so during this specific day, lots of Bitcoin was traded between buyers and sellers. While if we look at another day, so let's for example look at, you know, I think it was this day right here where we have very, very little volume. This means that not a lot of Bitcoin was traded that day. It was a very calm day. We had some transactions, but not a lot compared to this day. And what does these volume bars tell us about the price? Well, in general, what you can think about is that the more volume we have, the more important the move will become. So when we have a very tall volume bar like right here, it usually indicates that this move right here is important. So let's actually analyze this specific move even further and see if it was anything else important that happened during that move. To do this, let's actually use our rectangle tool that you know about for now, and you can actually see very, very interesting. This is very, very interesting. You can see that we had resistance, 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 resistance multiple times. The price have been reacted at this price level, right? And once again right here, once again reacted as resistance. And look at the day with lots of volume. This was the exact day when the price broke above resistance. So here is when technical analysis starts to get really interesting. Now we have two things happening at the same time. We are breaking resistance and the volume is showing that this is likely to be a significant move. So now we have two bullish things happening at the same time, and after this happened, you can see that the price completely exploded here towards the upside. It completely exploded to $100,000. So that was an amazing technical move. Alright then, so the next indicator I want to show you guys is called the Relative Strength Index, or for short RSI. And to open up this indicator, once again, you head up here to the Indicators tab and you simply search for RSI. And you are probably starting to get used to this by now. You will find indicators under Technicals created by TradingView, and you will find indicators created by the TradingView community. So for example, right here, you can see we have an indicator called RSI Divergence. And remember when I talked about the MACD indicator, that was actually the method I used for another indicator called MACD. So here it looks like some in the community have created a MACD, an RSI indicator that automatically finds these signals and so on and so on. So guys, definitely feel free to explore all of the community indicators. That can be, you know, very fun. But for now, we still want to keep it simple and just open up the built-in RSI, and this is this one right here. So as you can see right now, the RSI indicator, just as the MACD, will appear here at the bottom of the screen. And the RSI is actually pretty similar to MACD because they both measure the same thing. They both measure momentum. But how they measure momentum and the exact use case will actually differ a bit. But what you still can see here is that just as with the MACD indicator, when we saw this massive push towards the upside, you can see that the RSI also pushed up very high. You can see we reached a high all the way up here. And another thing that is very important and that you can notice is that just as with the MACD, we actually saw one high and then a higher high on the price, while the RSI printed one high and then a lower high. So the price printed higher highs while the RSI printed lower highs. This right here is a bearish divergence for the RSI and indicates a reversal to the downside. Many times the RSI and the MACD will give same signals, and that is usually a good sign, but sometimes they will give opposite signals. So that is why I personally like to use both the RSI and the MACD to confirm that they are both producing the same signals. But yeah guys, I also have a full RSI indicator trading course here on the channel. So guys, I highly recommend to check that one out. It's packed with value, and I will of course make sure to link that video somewhere up in the corner so you can watch that full course after we're done with this one. But alright, so for now, let's actually, once again, let's take away the RSI indicator, and let's also take away the volume indicator by clicking remove right here, so that we once again have a clean chart. Because now I want to take some very quick time here to talk about time frames. Time frames is something we have already mentioned here, but let's take a look deeper. So first of all, right now we are looking, we're looking at Bitcoin here, and we're looking at a daily time frame. You can see that by looking here or up here. You can see it says D. But let's say we want to change the time frame so that instead of every candlestick being 1 day, we want every candlestick being 1 hour. To do this, what we simply do is that we go up here and press on the D, and then we go down right here. You can see we have tons of different time frames to choose between, but if we want 1 hour, then we simply press on 1 hour like that. After opening up a new time frame, you will need to adjust the chart a bit so it fits your chart, just like that. So now every candlestick on the chart represents 1 hour, but if we want to change once again, we go up to the 1 hour button right here, and let's say that we want every candlestick to only represent 5 minutes. So let's open up the 5-minute chart right here, and just like that, every candlestick will be 5 minutes, but once again, we will have to readjust the chart. And now you might of course wonder, what is the best time frame to trade? Should I trade the daily time frame? Should I trade 5 minutes? And the answer here is that it just depends on your trading style. Some traders, maybe you have a 9-to-5 job and don't have time to sit in front of the computer the whole day, then the daily time frame might be better, because that allows you to just trade, just look at the chart maybe once in the morning and spend like 30 minutes in the evening to plan your trades. But if you have lots of time and want to day trade, maybe the 5-minute or the 15-minute time frame are more suitable for you. Both time frames can work, and it really depends on your own preference and trading style. But alright, so now I want to talk really quickly about something called multi-time frame analysis. So if you are a more advanced trader, this is probably too complicated right now, but as you become more experienced, you can actually start using multiple time frames at the same time to trade. So you might, for example, analyze the daily time frame, and then you zoom into the 4-hour time frame to get a more precise analysis where to enter and perhaps set your stop loss and target level and so on and so on. So you can combine multiple time frames. And here we can actually have, for this multi-time frame analysis, we can actually have multiple charts on the same screen. And let me show you guys how this works. So to do this, you want to go up here to where it says layout setup. So you press right here, and let's say that you want to have 2 charts at the same screen. Then you simply press right here. And as you can see, this is one of the times where you actually need to have a paid TradingView plan. I'm currently logged in to my account that is on the free version, and the reason I'm doing this is because I know that a lot of you guys will have the free version, but if you want to split the screen into 2 parts, you will need to upgrade to an essential plan. And remember, by using my link down below, you can try out premium for free for 30 days, and you can also get a $15 bonus. So if you want to try out this feature, make sure, guys, to take advantage of your free trial. And if you, for example, click, let's say that you want to have even more time frames for, this is not really common, but let's say that you want to split the chart into, multiple charts, you can press right here. And you can see in order to do this, you will need to have the premium version and so on and so on. So as you can notice, the basic plan has some limitations, and this is one of them. But alright, so at this point in the tutorial, you already know a lot about TradingView. You know about tools, indicators, you know how to navigate the chart, and you are probably really starting to feel a bit familiar with TradingView. But the one thing we haven't talked about yet is how do we find the best stocks, the best cryptocurrency, and even the best Forex to trade. So now, Let's take a look at this for a while. And to do this, we want to head up here to your profile, and we want to actually go back here to home. So let's click home right here. So now we're back on the home screen, and what we want to do is that we want to go up to products here, and then we want to go to screeners. The screeners here is an amazing tool for finding, the best, as I said, the best stocks, the best crypto, or whatever you want to trade. And let's begin here by keeping it simple and open up the stock screener by clicking stocks right here. And now, as you can see, multiple stocks have appeared here on the chart. And you can see here in the beginning, we can see many interesting data such as price, the change here over the last day. We can see the volume. We have been talking about the volume. The market cap is the value of the company. And you also have some interesting financial numbers like the PE number, the earnings per share, and so on and so on. So just in the beginning, you will get lots of information about the stocks. But here, it's actually up here where you can start to really experiment and choose exactly what you want to find. So let's, for example, say that right now the market is USA, but you can choose, let's say you are from India, you can choose India, or you are from Germany. Maybe you only want to search for German companies. But now let's choose USA right here. But let's say that I actually want to only look at companies that are in the S&P 500. Then I can simply choose S&P 500 like that. And I can also, let's say that I want to only find the companies that went up 10% or higher in the last day. And when doing this, we can see that no company in S&P 500 went up more than 10%. So that was a bit bad. But let's, for example, choose 5%. Well, nothing 5%, so that was a bit sad as well. It was a bad day, but maybe let's look at 0 to 5%. So now all the companies that went up 0 to 5% will be shown right here, and we can sort it from descending, which means that the best one will be on the top and then go down. So we can see that the best performing company in the S&P 500 was this Lamb Weston Holdings. But all right, so let's say that we want to choose another index. Maybe we want to look at the Nasdaq 100 instead, which is a more tech-focused index. We can choose Nasdaq, and now only stocks from Nasdaq will appear. And if we sort here by ascending, you can see that we had a pretty bad day. Tesla was down 5%, and many companies was down 1 to 3% here. So it was a pretty bad day in the market. But remember that the price going down as a trader doesn't have to be a bad thing. That can actually mean that we have an opportunity. So here you have just tons of different factors you can use to filter, but you can also add your own filters. So let's take a look at how to do that. You can press on the plus button right here where it says add new filter. And let's say that we want to add a technical filter. So this is the technical analysis tools like indicators and drawing tools we talked about earlier. So let's choose technicals right here. And let's see if we can find a technical here that we have already talked about. For example, we have already talked about the RSI. So here we can actually choose the RSI in the index right here, and we can add this filter. Then we press right here, and now we can choose to, for example, only show companies that are below 30. This means that we will only show the companies that are currently oversold on the RSI. So let's choose this filter right here. And here we can see that only 3 companies in this index have 30 or lower on RSI. And we can actually double check that this is true by clicking on the symbol here, for example, fast. Then we want to click on see on supercharts right here to open up the chart. And remember here, the filter we talked about earlier, this one is based on the daily time frame. So it's very important that you change the time frame here to daily, so that every candlestick represents 1 day. And now we can open up the RSI to see if it's actually true that the RSI is indeed below 30. So we open up this chart, and as you guys can see, right here, this line right here, I hope you can see, my camera is a bit away. Let me remove myself. So you can see this line right here is the 30 line, and we can indeed see that the RSI is below 30. So hopefully by now, we can actually close this one and this one. Hopefully by now you can start to realize how much power this stock screener has. We can search for companies with RSI below 30, but we can also, you know, add even more filters. Maybe we want to add a Bollinger Band. Maybe we want to add, you know, even more technicals. Maybe we want to add a specific candlestick pattern, and so on and so on. There are so many, pretty much infinitely many combinations you can do with these stock screeners and crypto screeners. But now let's actually go back here and just leave the stock screener for a while, because I want to just very quickly show you guys the other screeners as well. To find the other screeners, you click on products, you go down to screeners, and for example right here we have a crypto screener. And I'm not going to go into detail about the crypto screener, but it works pretty much the exact same way. Right here we can see the rank, so maybe we only want to show the top 50 cryptocurrencies, then we can show them right here. As you guys probably know, Bitcoin is the rank 1 crypto. We have Ethereum at 2. We have XRP right here performing pretty well recently. We have Solana, Dogecoin, and so on and so on. And just as with the stock screener, you have many things you can filter between. First of all, we might want to look at which coin performed the best recently. Well, here we have a meme coin called Pepe that performed very, very well in the last 24 hours. And just as with the crypto screener, we can also add our own filters. So to add a new filter, we simply press on this plus button right here, and we can add, for example, a moving average. Let's maybe add an exponential moving average. We can add that filter, and you can use this screener to experiment. I highly recommend spending some time with these screeners to really get used to them. But for this course, we don't really have time to spend so much time in here, so I think I will wrap up the section about screeners right here. But alright, so now guys, let's actually head back to the TradingView home screen. And to do this, we simply navigate up here to the upper left corner and we press on TradingView. Because now I want to show you guys the TradingView replay tool. And the replay tool is a tool that you can use for multiple different use cases. You can, for example, use it to practice trading. You can practice basically how you would have traded back in time. So it can be very useful for that. But it can also be used, and this is very important, it can also be used to actually test how strategies have performed in the past. This is what is known as backtesting. So this right here is a tool that I think is very important to learn the basics about. So let's take a quick moment and do this. And to access the replay tool, we once again want to go to products here and we want to open up a chart. So we press on super charts right here. The exact chart doesn't matter too much. As you can see, I'm currently looking at Bitcoin here on a daily time frame. But as I said, it doesn't really matter what chart you're using. But now then, to access the replay tool, we want to head up right here to where it says replay, and then you simply press on this button. After clicking on replay, you can see that a blue line will appear. And where you use this blue line is basically where back in time we will jump. So if you, for example, go back here, you can see that the chart will jump to that point back in time. And now if we for some reason jumped to the wrong period in time, we can press this select bar right here once again, and we can once again jump back even further back in time. The point here where you want to jump back basically depends on how far back you want to look at the price, Or if you want to move to a specific moment and analyze, perhaps maybe you didn't follow your trading plan for some reason, and then you might want to jump back in time and try to relive that experience. So let's say we want to jump back even more here, we maybe want to jump back all the way back here, then we can simply use the replay tool to do that. And as always, we want to adjust the chart here to sort of fit our screen. And now, after we have jumped back in time, we can actually click on this button right here, which is basically a play button. And as you can see, you can either press on this one, or you can simply click shift and down arrow. By doing this, we can see that the replay here will start. So you can see the price. Now we see how the price have moved like in the past. And if you anytime want to pause the chart, you simply go back here and click on pause or shift down again. So this will pause the chart. And here where it says 10x, you can see that it says replay speed. So right now the chart is going pretty fast when we replay. So if we want to slow this down, we can, for example, choose 3x right here. This will give us 3 updates per second instead of 10 updates per second that we have right now. So let's choose 3 updates per second and once again click play, and now you will see that the price will move slower here. This can be much better if you don't want these sort of super fast movements. And then whenever you want to pause and analyze, you can click pause right here. And you can use this tool to basically look back in past and see how a strategy might have performed back in the days. And you can also use this tool to jump to a specific moment in time, as I said, and actually practice, with my strategy, how would I actually have performed back at this moment. And these are just 2 very basic things you can use the replay mode to, but in this course we don't really have time to dive super deep into the replay tool, but I hope this gave you a nice sort of overview and that you can get started and start experimenting with the tool. But now, after you have used the replay tool, you of course want to know, how do I get back to the normal chart? Well, to do that, we just simply go up to a replay once again, we click right here, and then we click that we want to exit the bar replay mode. And just like that, we will return to the normal chart. As always, we need to zoom in here to our liking so that we can see the chart clearly, just like this. But now guys, now it's finally time to take a look at a question I think that many of you guys are asking yourself right now. And that is, can we actually trade inside TradingView, or do we need another platform to place our trades? And the answer here is actually that yes, you can trade inside TradingView. But there is a sort of caveat here, and that is that only certain platforms you can use to connect to TradingView. And to see which platforms you can use, you can go down here where it says Open Trading Panel. And here you can see that we have a few brokers here that you can connect to TradingView and actually trade inside TradingView. And if you want to dive even deeper, you can click here Explore Brokers, and here you have some stats. You can, for example, see that we have more than 2.7 million traders trading through TradingView right now, and we have more than 250 million executed live orders. And if you want to trade stocks, you can choose here, look for a platform that fits you. This is something that takes time to find the perfect platform, and we don't really have time in this course to dive deep into this. But so I recommend you guys that if you want to trade inside TradingView, spend some time and search for the perfect broker to connect to TradingView and the perfect broker to you. But now let's actually cross out this tab, because now I want to talk about something called paper trading. And first of all, what is paper trading? Well, paper trading is basically when you use fake money to simulate real trades. And here, luckily, TradingView has an amazing paper trading tool. And to access this tool, once again, Let's go back to the chart. To access this tool, you go to the trading panel, and as you can see right here between the brokers, we have paper trading. And as you can see here on the gray text below, it's a broker simulator by TradingView. So if you are a beginner to trading, this is a great way to practice placing trades without the risk of actually trading. So now let's take a look at step by step how you can get started with paper trading. And to set it up is yet very simple. You simply just click on this button right here, and then you press connect. And just like that, your account is created. And as you can see here on the account, we have a few different numbers. For example, right now you have $100,000, so you are rich here, but unfortunately this is just fake money. But before we start here, there are a few settings I want you guys to take a look at and also change to make it more simple and better. So you go here to where it says account settings right here, and you can see that I have changed everything to 1-1. You see under leverage, it says 1-1 for stocks, futures, crypto, Forex, and everything. And if this is not true for your account right now, you can simply press reset account right here and change all of these numbers to 1-1, 1-1, 1-1, and so on and so on. And here, if you want to, this doesn't matter too much, but you can also change the balance of your paper trading accounts. Let's say that you want to start with $1 million, then you simply you simply type in 1 million here, and then you can choose dollar. Or if you are using another currency, you can actually choose another currency as well. So feel free to choose another currency if you want to. I'm gonna choose US dollar and 1 million. And the reason I'm having 1-1 for all of these is that it will make it easier for beginners to sort of understand. And I will get to that soon. But now let's actually click on reset right here, and just like that you will see that we will have an account balance of 1 million US dollar, and of course this is fake money. But now when you have an open account, you can see that we have some tabs here. It says positions, orders, history, and everything like that. And of course, because we haven't placed a trade yet, all of these tabs will be empty. So now the next step we of course need to do here is that we need to place a trade. So let's now take a look at how to place our first trade. And to do this, to take down this tab, we want to go up here to where it says paper trading, and we want to close the trading panel just like this. And now to buy or sell something, one way you can do this is that you can simply go up here to the upper left corner where it says buy market or sell market, or you can right click on the chart here and you can press trade right here. You can go here and then you press create new order, and just like that our trading panel will appear. And now as you can see, it says BTC USD, that is Bitcoin measured in USD, and it says paper trading, and we have the buy button selected right now, and we also have the sell button right here. But let's click buy here and take a look at how we can buy Bitcoin. And you can see that we have 3 different methods here to buy. We have market, we have limit, and we have stop. And for this video, I'm gonna show you guys the market order. This is the most simple and most basic order type. But if you guys want to learn about the limit and stop order as well, I actually have a separate video here on the channel where I talk about that, and I will make sure to link that video somewhere up in the corner so you can watch that video when you are done with this course. But the most important order to understand here is the market order. So let's just go over this order type step by step. And first of all, you can see units here. That means that we want to buy 1 Bitcoin. And then you see that we have a % risk here. What I want you to do, this is more simple, is that we click right here and then we go to the USD, because now you can see here that we want to buy 1 Bitcoin. So we change to 1 Bitcoin, and then we can choose the price. And what you will notice here is that this price is actually the exact same price that Bitcoin is trading at right now. And that is because a buy market order basically means that we want to buy Bitcoin at the current price, while a sell market order means that we want to sell Bitcoin at the current price. But now let's take a look at how to place a buy market order. So we want to buy one Bitcoin, we want to buy it at the current market price. So we have selected both things correctly. But now you also see that we have a take profit and a stop loss, and we want to use both. The take profit level is the level where we will automatically sell our Bitcoin. And here you can see that we can choose between ticks, we can choose the price, USD, and so on and so on. And here I think the easiest way is to use the price here. So let's say that we want to take our profit at $100,000, right? Remember that the price is currently at $93. So this would mean that if the price goes up here to 100,000, we would automatically sell our Bitcoin. And remember here that this is not based on any analysis. Right now, I'm just showing you how this works. The same thing is true, but the opposite for the stop loss level. The stop loss is the level where if the price goes down to that level, we will automatically sell the Bitcoin we bought. So let's say that we want to automatically sell if Bitcoin reaches 90,000. Then we simply type in 90,000 on the price. So now we have our profit at 100,000. We have our stop loss at 90,000. So now we are ready to place this order and buy Bitcoin. And just like that, now we can actually zoom in a bit here. You can see that our order is complete. We just bought Bitcoin right here. If the price drops below this orange level at 90,000, we will automatically sell. And if the price pushes above the 100,000 level, we will automatically lock in profit. We will gain 6,700 fake US dollar if we win, and we will lose around 3,300 fake US dollar if we lose. And now guys, when we have placed our first order, now we can of course see the orders if we press on paper trading down here. So now you can see that we have a current position, so we are long, meaning that we are betting that Bitcoin will go up in price. Right here, you can see our average price, and you can see our profit and stop loss and so on and so on. You can also, if you go to the orders, see that we have some active orders. And this is just, you can see that we have the take profit at 100,000 and we have the stop loss at 90,000. Everything is in order right here. And now if we go back to the chart, you can see that we have actually lost $100 around there. So let's say that we actually want to sell our Bitcoin now, then we simply press sell right here. We have 1.003 Bitcoin, so we press sell just like that, and now we sold our position. Once again, we can go back to our trading panel here, and now you can see that something happened to our balance. Remember, we started with $1 million, and you can see right here that we have a total of minus 130 US dollar. So now you can see here that all the orders, we can see here we have no orders right now, but here you can see that we had our buy and sell order. So now you have successfully bought and sold Bitcoin, and in, if this was real money, you would have lost $130, but luckily this was just fake money and we just randomly bought and sold, so that's all good. But I really hope that this short tutorial gave you a good instruction into paper trading. But alright then, so now we're ready to actually move on to something else. So I want to quickly just close the trading panel right here. Or what I actually want to do is that I want to open up the paper trading, and I want to show you guys how to log out of paper trading. And to do this, you simply press the account settings right here, or no, you press the this one right here. You can see the little arrow where it says paper trading, and then you press log out paper trading, and just like that We are no longer in the paper trading system here. But alright guys, so now I want to show you guys a very important feature, and that is how to set alerts in TradingView. By setting alerts, you can get notified when, for example, the price crosses a certain important level, but you can also go much more advanced. So for example, you can get alerts when you see something happening on a specific indicator. You can use multiple alerts to sort of create a combined analysis between indicators price. So you basically don't have to sit in front of the screen the whole day. You can simply set up alerts and let the alerts do the job for you. So let's quickly here take a look at step by step how to set up an alert in TradingView. And to do this, what we want to do here is that we want to go up to the upper right corner where it says alerts right here. And now to create our first alerts, we want to click alerts right here. And then we want to press the plus button called create alert. And now, as you can see, first of all, we have the symbol. This will be the current chart we're looking at, which is Bitcoin. And then we have the condition right here. The condition is basically the what the alert will be based on. So right now, the alert is based on the price action, so how the price moves. And here, and this is very important, here we can choose what type of alert we want to create. So for example, we can create alert when the price moves up a certain percent. We can create an alert when the price, for example, crosses a certain level. Or we can create an alert when the price is above a certain level. So one sort of very common alert that we can create here for Bitcoin, especially right now, is actually an alert that will happen if the price goes to a new all-time high, because this is a very important event that many traders will probably pay attention to when Bitcoin goes to a level it has never reached before. So let's create an alert for that event. And as you can see on the chart, we can see that Bitcoin reached a highest level at around 108,449. It was actually a bit below. But to be certain here, let's say that we want to have an alert just slightly above this level. So when the price is above or goes above that level, we will get notified. So to do this, we simply choose greater than, because the alert will trigger when the price is above that level. And here where it says value, we can choose the level. So let's actually choose 108,500 here to be on the safe side. Maybe we don't want to get alerted if the price just moves a tiny, maybe $1 above the level. We can put 108,500 to be a bit more certain that the price actually moved above the level. So we can choose 108,500, and we can choose if we only want to get this alert once or every time this happens. So if the price moves up and down close to the level, it can be a good time to get alert every time. So we not only get noticed once and then the price might reverse and so on and so on. So this depends a bit on your strategy, but you can choose here every time if you always want to get notified when this happens. And of course, if the price goes above this level and you don't want to have it anymore, you can delete the alert at any time. And here we can also choose a name for the alert. And for this one, we can just call it Bitcoin all-time high, right? Because this is what the alert tells us. It tells us if the Bitcoin creates a new all-time high. Here, if you press on notifications, you can also see here that you can choose a few different notifications here. The standard is that you will get notified in the app and on the sort of website, but you can also choose to send an email, play sounds, and so on and so on. You have many different options here, so simply choose what fits for you. And when you are ready to create the alert, you simply press create right here. And just like that, you can see that the alert you can see the alert here in the upper right corner. And as you guys can see, right now the alert is active right here. When the alert confirms, you will find the alert here in the log. So to show you guys this just super quickly, you can press here to create a new alert. And let's just create an alert for Bitcoin. Let's say Bitcoin greater than, then we choose a value here, and we choose Bitcoin the price greater than 90,000. And as you can see, the price is already above 90,000, so this alert should trigger right away. So let's just do create right here, and you can see that right away this alert got triggered because the price is already above 90,000. So if we go here to the log tab, we can see that this alert got triggered right here because Bitcoin is above 90,000. And if you have old triggered alerts and want to delete them, you can simply press delete right here. But now guys, you might be interested in, so now you know how to create simple alerts when the price goes above a certain level or below, or maybe moves up a certain percent. But now you might be curious, how can we create more advanced alerts, maybe some alerts on indicators and so on and so on. So let's show you guys a simple example of this. To do this, I want to open up a random indicator. So we go to the indicators tab in TradingView up here. And let's just open up, let's say we want to open up RSI. So we search for RSI and then we press on relative strength index to open the RSI indicator. And remember, to create an alert, we want to go up here to the plus sign here where it says create an alert. And once again, we're looking at the symbol. We're still looking at Bitcoin. But now, instead of the condition being the price, we want the condition to be the RSI, right? So now the alert is based on the RSI, not the price. And here you can see that we have many different options. We can actually choose bullish divergence, bearish divergence. These are two signals that I like a lot. But to keep it a bit more simple, we can still use, a similar alert to the price, but we can use it for RSI. So let's say that we want to get alerted when RSI is above a certain value. So we can choose greater than. And here, and this will be little bit confusing, automatically the value would be the same price as Bitcoin. And remember, RSI can only go between 0 and 100. So choosing values above this will not make a lot of sense. But let's say that we want to get an alert when RSI is above 70. Because above 70 is what is known as the oversold RSI area. So we can actually go down and call this alert, I'm sorry, it means overbought. So let's call this alert overbought RSI. And just like that, we can click create. And just like that, we have a new active alert here. We will get notified when the RSI passes above this line right here. And now, to just check that this one works, we can create a new alert. And let's say that we want to create an alert that alerts us if RSI is above 30, which is right now already is. So let's super quickly do that. We click plus right here. We choose RSI right here. We choose greater than right here. And then we simply choose 30. And this one, let's just call it, it should get triggered, because this alert should get triggered right away. If not, I'm doing something wrong. So let's just quickly create this one right here. And damn it, now we can see that, you can't, on the free plan, you can only have a certain amount of alerts. So remember guys, to use the link down below if you want to use the trial for 30 days. You can create how many alerts you want, and you can also paper trade as much as you want with no restrictions. This can actually get a little bit annoying, but to avoid this, let's actually delete our this alert right here that we don't need anymore. Let's delete this one. So now I should be able to create this alert, right? It should be able to work. Let's delete all the alerts here to just see RSI greater than. Now when I have deleted all alerts, it should work, right? Yes, just like that. You can see now it finally works, and because the RSI is already above 30, you can see here that this one will get triggered right away. So Just as we predicted, it worked very well. But as you can see, the free version of TradingView, in my opinion, it's a good way to start. But it's definitely, when you start using TradingView more and more, you will realize it's more and more restrictions. So I highly do recommend eventually, when you feel comfortable, to upgrade to a paid plan or try out the free trial. So if you want to do that, make sure to use the link down below. It really helps out the channel as well. So if you feel like you found value from this whole course, I would super appreciate if you make sure to use that link before you sign up, and you will also get your $15 bonus and free trial. What are the best and worst TradingView indicators to make money? Well, in this video, I will be ranking 21 of the most popular TradingView indicators on a tier list, from S, which are the absolute best ones, all the way down to D, which are for the worst. And at the end of the video, I will crown one indicator as the winner and one indicator as the biggest loser. Alright, okay, so we are very soon ready to start ranking all of these TradingView indicators from best to worst. But real quick before we start here, I think it's important to mention that, of course, this video is just my opinion. It's made for fun, not financial advice. But now then, let's begin here by ranking the ATR indicator. The ATR is one of these legendary indicators that lots of traders use. If you don't know what the ATR indicator does, it basically measures volatility. And the ATR indicator has multiple use cases. For example, you can use the ATR to get mechanical rules where to place your stop loss, but also mechanical rules where to place your target. This is definitely not a bad indicator. I do think I want to place this one somewhere here in the top, but because personally I actually don't use it that much, so I can't place it on the S tier. I'm thinking actually maybe A tier for ATR. This is a solid indicator. Many people are finding success with it, so I'm thinking A tier or B tier. Maybe I will flip around a bit later on in this video, but let's begin here by placing it actually on the A tier. Next up here we have the volume profile indicator, and after the volume profile we have the standard volume. So the volume profile is basically an indicator that measures volume, but instead of measuring the volume for each candle, the volume profile measures volume for each level. So you can see at which levels on the chart where the most stocks, crypto or Forex traded. And this one, I know that many traders are using and finding success with this indicator. Personally, however, I do prefer volume, so I want to place volume above volume profile. This might come as a surprise, but I like to keep it simple. I really like the volume indicator. You see exact, how much each candle is worth. And volume is one of these indicators I use a lot, and I do want to place volume here on A tier. I actually think I want to place it before ATR as well, but because I prefer volume over volume profile, I do want to place volume profile below volume. So I'm thinking actually a B tier or maybe even a C tier. But let's for now place it at B tier, because I do know that many traders are finding success with the volume profile. Once again, this is not an indicator that I use too much. Next up, guys, we have the MACD. The MACD is an indicator that I use a lot. You're probably familiar with the MACD indicator. It measures momentum. One of my favorite use cases when it comes to the MACD is to use it to find divergence. I especially like the histogram divergence. I like the normal settings, but we have another setting of the MACD right here that we will rank as well. But I think that the MACD is a solid A. I use it a lot. It's great for finding momentum divergence. And because of this, because I use it so much, I want to actually place it even above volume. So far we have some great indicators: MACD, volume, ATR. All of these are good indicators that I like. So all of these are A's, but I don't really, I would not really consider this one an S tier yet. So, you know, stay tuned for the S tier ones. All right, so now you might wonder, what is the 3-10-16 MACD? Well, this is also the MACD, but these are different settings. These are the settings that got, I think, got popularized by Linda Raschke, and they are especially good for finding these momentum moves or these impulsive moves that we want to look out for before the price pulls back. So you can also use this in these settings to find divergences, but the 3-10-16 settings are especially good to find impulsive moves, and trading pullbacks is a great trading strategy. So once again, guys, I'm thinking of an A for this indicator, but the question now is, do I want to place it above the normal MACD? Well, let's for now place it above the normal MACD. I don't really know if I would say that either one is better than the other, because they basically have slightly different use cases and can be used in different scenarios. But now we have an indicator called auto candlestick patterns. So this is an indicator you can find in TradingView if you guys have the paid TradingView plan. And by the way, guys, if you for some reason don't have TradingView yet, I will make sure to leave a link down in the description, the top of the description, and the top comments. And you can use that link to try TradingView Premium for free for 30 days, and you will also get a $15 bonus. So by doing that, you can try out all the indicators you can see right here. But the auto candle patterns, I really like this indicator because it's great at finding candlestick patterns. And you know, they can find pretty much all candlestick patterns automatically. However, I'm hesitant to place this one on an A because I have found that this indicator will not always find all patterns that, you know, I would consider, at least I would consider patterns. So I can't really place this one at an A tier. I would probably go for a B tier here with the auto candle patterns. Still a solid indicator, but not one of these indicators that are completely wow. I do think even, you know, even if you're using this indicator, I really do think it's important to learn about candlestick patterns on your own. But all right, so now we have reached some moving averages. We have the simple moving average, the Hull moving average, and the exponential moving average. And now, where should I place the simple moving average? Well, if you have been following the channel here for a while, you might be familiar that I'm not the biggest fan of moving averages in general. So if we only look at the simple moving average as a standalone indicator, I don't really like this one that much. I would say it's a C. You know, I can't really place it at a D tier, but I would probably place it at a C tier right here, because what a moving average is that it's basically, you know, especially the simple moving average, it's just, you know, the average of the last X amount of candles. But at the same time, moving averages are used in indicators like the MACD, so they are definitely not useless. So I can't place it at a D tier. I think that the SMA is for sure, you know, a C tier here. Alright, so before we continue here, I want to give a big shout out to all our new channel members. You guys are making these videos possible. I spend a lot of time and effort on these videos, so if you want to give back while at the same time getting access to exclusive content, please consider becoming a channel member by clicking join below this video or on the channel page. Now let's jump back into the course. As for the next moving average, the whole moving average, this one has a much more complicated calculation, and the calculation is made here to try to improve the responsiveness of the moving average while at the same time making it more smooth. And I do think that the Hull moving average succeeds quite well with this one. So I am thinking to actually place it above the SMA. The question here is if the HMA can actually crawl up to a B tier here, or if I should set it at a C tier as well. Well, let's for now actually place it at a C tier, because we also have the exponential moving average right here, Once again, this is the same problem as with the SMA. Let's place it a bit higher because I know that more traders are using the exponential moving average. The exponential moving average is used in the normal MACD calculation, so it's definitely not used less, but I have a hard time placing the moving averages, as standalone indicators higher than C tier, at least for now. But alright, so what about the auto chart patterns indicator? This one is similar to the auto candlestick patterns in that, the goal of this pattern is to automatically find chart patterns. But this indicator is definitely more advanced than the candlestick pattern indicator because finding chart patterns is more complicated. And in order to do this, you will need something called pivot points that are used in many indicators. And as you can see, we will talk about pivot points later on. This one I'm very excited to talk about. But the auto chart patterns, I do want to place above the auto candle patterns because of the more complicated calculations, and this one can be really helpful to find chart patterns, and also this indicator automatically finds target levels as well. So definitely a more complicated, more sophisticated indicator right here. I'm actually going to place the auto chart patterns at the A tier here. However, for now, I do think the ATR is more significant. I do think volume and MACD is more significant as well. But this one actually crawls up to the A tier here. All right, so now then, what about the RSI? This is probably one of the most well-known indicators. This one also measures momentum, and I really like the simplicity of the RSI. So I'm thinking that the RSI is actually an A tier here. However, do I like it more than the MACD? Well, that's a hard question. I think for now, I might actually place the RSI right here. It's hard to say. I actually use the RSI and the MACD a lot. I like when the signals are, for example, when we see divergence on both the RSI and the MACD at the same time, I consider that a stronger divergence signal compared to if we only see it on the MACD. So I like to use both the MACD and the RSI. But this one is hard. Let's just place it right there for now and see if we will change the position later on. But alright guys, so what about Fibonacci retracements? This one, another very, very popular tool here. However, do I actually think Fibonacci retracements are very useful? Well, they, especially if you are a beginner, I would say that the Fibonacci retracements can be very useful to sort of learn how the market tends to move. When we see an impulsive move, the market tends to pull back around 60 to 40%, and for that reason Fibonacci retracements can be used. However, as you get more and more experienced, you will be able to see these sort of Fibonacci retracements without really having them on the chart. So I definitely don't think I can put Fibonacci retracement on the A tier. The question is, can we even put it on the B tier right here? Well, I do think the Fibonacci can go here on the B tier. I'm placing it below volume profile. And this is because I definitely can see how Fibonacci retracements, can definitely be useful, especially if you're not used to, how the market tends to move. But now we have something called Fibonacci circles. And I gotta say that I'm not familiar with this one. I haven't been using this one a lot, but I have been checking out the indicator a little bit. And from what I have seen, guys, I definitely can't place this one on a B tier. I'm not sure I even can place this one on a C tier. So this might actually be our first D tier right here. Because Fibonacci circles are basically, they try to incorporate both price and time into the Fibonacci calculations. So I can put up an image right here so you can see how it works. It goes, the Fibonacci levels goes both up and to the right. And I have a hard time seeing how this indicator will help you read price. At the end of the day, what all indicators aim to do is to make the charts easier to read and easier to analyze. And I think that one of these And I think that this indicator is one of these indicators that makes the chart more complicated and will be confusing. But as I said, I haven't used this indicator a lot. I have just taken a quick look at it. So if you guys are using Fibonacci circles and are finding success with it, just let me know down in the comments. As I said, this tier list is definitely not a true, factual tier list. This is just my personal opinion and, the tier list I'm making here on the spot. But all right, so what about trend channels? Here you might be a little bit surprised, but I don't think I can place the trend channels even on the B tier. I actually think I have to place trend channels here on the C tier. And the question is, do I want to place it above or below the moving averages? I think I'm placing it above the moving averages, but still on C tier. And the reason we have trend channels at at this tier is because, yes, trend channels can be useful. It's not that trend channels are useless. However, I do personally think it's much more important to learn market structure and have some rules to find your trends rather than trying to fit your trend lines perfectly to a trend channel, because using trend lines will always be so subjective, and everyone's trend channels will look differently. So the question here is, how predictive are they? However, I don't find that I can place them all the way down at D tier, but C tier, I think it's a solid placement for trend channels. And I guess this one might surprise some of you guys, but yes, they can be useful, but are they the best indicator or tool? Not really, in my opinion. But now guys, now we have an indicator called pivot points high and low. And this is one of these indicators that I have made videos about, and when I make videos about this indicator, some comments will always say, this is a useful indicator because it's lagging and so on and so on. But this, guys, in my opinion, is my first S tier indicator. And why is this the case? Well, first of all, if you look at multiple complicated indicators, maybe some sort of smart money concepts indicators, or even the auto chart patterns and many other indicators. In order to build these indicators, you need some kind of rule for pivot points. You need some kind of rule to base your pivot points on. So first of all, this indicator is very important and is a building block of many other indicators. And secondly, I find that this indicator can be very useful in finding sort of the most significant market structure. So you can, for example, use this indicator to find key support and resistance levels. So what are the most important levels that the price have actually been struggling with the past? You can use pivot points for that. And pivot points have many other use cases as well. So I do think that this is one of these indicators that belong on the S tier. But yeah, guys, if you disagree with me, just let me know down in the comments. I have nothing against that. I definitely see how, maybe some of you guys will place this one at D tier. I don't know. But this, in my opinion, is an S tier indicator. What about the Fibonacci extensions? As you already know, we have been talking about Fibonacci retracements. Fibonacci extensions, in my opinion, might actually be a little bit better here. And you might wonder why. Well, the Fibonacci extensions can be used in a pretty similar manner as the retracements, but in this case we're using it to find the targets. And one use case that Fibonacci extensions has that Fibonacci retracements don't have is that if an asset, like a cryptocurrency or Forex or whatever, breaks to a new all-time high, if that happens, we don't have many tools to find target levels. And this is one of these use cases when Fibonacci extensions can come in. Because when you use the Fibonacci extension, you can find target levels beyond all-time high levels. It can also be used if something is not at an all-time high, but it can definitely be used to find target levels beyond these levels. And the question you might ask yourself here is, is there any kind of truth value to the Fibonacci levels, or does this indicator work because many other traders are using Fibonacci as well? And that question I leave to you guys to discuss. However, if a lot of traders are looking at Fibonacci extensions levels and use them, that can on its own actually lead to the price reacting to these levels. So I'm actually going to place Fibonacci extension just slightly above retracement. But alright, so what about Fibonacci channels? So Fibonacci channels are basically like trend channels, but in these channels we have the Fibonacci levels. And the question here is, would I place Fibonacci channels above trend channels? Well, this is one of these indicators that I do think just makes the concept more complicated. I think the Fibonacci levels inside the channels definitely make this one more complicated, and I'm probably gonna place this one all the way down at D. I much prefer the normal clean Fibonacci retracements over the Fib channels. So this is a D tier in my opinion. Alright, so now last but not least we have some, this is not really an indicator, this is more like general technical analysis concepts. And first up on the list we have smart money concepts. And here one problem with smart money concept is that I can't really find a solid definition of what is actually smart money concepts. You know, some traders says it's this, some traders says it's that, and from what I have learned here, smart money concepts basically seem to be you know, just concepts that we already know from traditional technical analysis, but it's taught in using different words and in a different manner. So in smart money concepts there are definitely useful things you can learn, and there are maybe some new concepts you can learn as well, but this is mostly just old concepts repackaged in sort of different terms. So it's definitely a useful concept to learn, but is it something new that deserves an S tier? Well, not really. So I think I'm gonna place smart money concept here just in the middle, you know, as a B tier. But now then, what about price action? Price action is basically the study of how the price moves right now. And you might be surprised, well, where do you think I will place price action? Well, it goes straight to S tier. It goes straight to S tier. Because in my opinion, this is one of the most important concepts you can learn as a trader. And because this concept is so important, it's also one of the concepts that takes time to learn. In order to be good at price action trading, you need to spend a lot of time in front of the chart and learn, you know, how the price moves. And if you don't really know what price action is, I like to think about a price action as micro, or in other words, what is the price moving right now? While market structure, which is right here, market structure is how the price have moved in the past. So for example, if you think about a resistance level, the actual level I would consider market structure, while how the price reacts to that level I would consider price action. So now you might of course wonder, where do I place market structure here? Is market structure as important as price action? I still want to place market structure in S tier, but I do think I place market structure just one step to the right of price action. Market structure is also very important, and you know, pretty much most of the indicators here are actually some combination of price action and market structure. So if you master both price action and market structure, you might even need most of these indicators. You might be able to read the price on your own and don't need the indicators. So I think that both market structure and price action are clear S tier concepts here. And you might notice that this is not really, you know, indicators anymore. This is more like broader concepts, but I still think they are very important to include. But all right, last but not least, we have support and resistance, probably the most common, the most overused, and you know, everyone that hears about technical analysis hears about support and resistance. And this is one of these concepts that I think, if used correctly, can be very good, maybe even start to creep up at S tier. But if you use it not correctly,
This can be one of these concepts that make the chart harder to read. You know, maybe you have too many support and resistance lines, or you know, you don't know how to use support and resistance. This can be one of these concepts that just make it more complicated. But I do think, you know, in general, if you really learn support and resistance, this is a solid concept. I think I'm gonna place it at A tier. The question here is, you know, where on A tier will I place it? Well, let's just place it right here. It's a solid concept, but it's not, you know, as high as, for example, market structure, because in my opinion, support and resistance is, you know, included in market structure. All right, so this TradingView tutorial is coming to an end now, and I want to thank you all so much for watching. That said, in order to become a successful trader, it's very important to continue your trading journey. And to do this, I highly recommend to check out this playlist right here. It contains all our free educational trading courses here on YouTube. So I hope to see you all over there very, very soon.